Good morning, good afternoon, good evening, depending whatever time frame that you guys are in. I'm based in London. This is Naeem Aslam, Chief Market Analyst at AvaTrade. I head the research department for AvaTrade, and all the daily research and the videos and the tweets that you are looking at, they are done by myself. And it has been a pleasure to serve you guys on a daily basis through our research, and I really hope that you guys do read that and then take some key nuggets out of them, as we have mentioned several different opportunities throughout this week. And market tends to fall in our favor this particular week, and of course we will discuss all of that in a bit. But before we continue any further, it is important for me to go through this slide of disclaimers and risk warnings. Anything which will be discussed in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, before we proceed any further from here, it is important for me to understand my audience, and then so that I can calibrate my level of expertise according to your taste, according to your understanding. So please, in a few words, yes and no, just answer the following questions. So first of all, let's just say that have you, any of you, attended any of my previous webinars? Fantastic, fantastic. Tala, Julian, Leonard, Blessing, Sharon, Gerges, Jean, Patrick. Okay, Patrick is a new one, but there are so many new new people, but of course a lot of old people as well who've been traders who've been returning to this one. And this just shows the evidence that, you know, that the information that these guys are hooked on, it is helping them. And more importantly, what is more important than anything else is that I really applaud the fact that all these guys are attending, because they want to learn. If you don't want to learn, then you will just continue to make the same mistakes over and over and over, and you will learn nothing. That is why trading journal is very, very important, because in trading journal, what you do is you mark your mistakes, and then next time you do not make the mistakes. Making mistakes is normal. Repeating mistakes is not normal. That is where you start losing money more, and that is when you actually start blowing out your capital, because you lose your discipline, and then you start trading based on your emotions, which encompass greed and fear. Now, the second question, if please say yes or no if you have been trading under a year. Okay, great. And please say no if you have been trading, yes or no if you have been trading over 2 years. Okay, so once again, what from your responses, what I see is that this is a mixed crowd, but the knowledge level is pretty good among you guys, because there are a lot of repeat guys. So I'm gonna kick things into a next gear today, and we will build up things. But don't you worry, all the newbies who are trading under a year, because I will try to build the momentum for you guys and then take things from there onwards. I'm going to quickly go through the next slide, which I believe it is quite important for you guys, because, you know, as today I mean 1:30, and then of course at 7 p.m. London time, we are going to get some really important piece of economic news. And all day today we also have the OPEC meeting also taking place. So where do you go and find all this information? Of course, you go to Reuters, Wall Street Journal, Bloomberg, CNBC, blah blah blah. But the fact is that the moment that you will get these news from these news journals, it would be too late. So what do? You follow Twitter and sign up on Twitter, because if you are serious about trading, then make sure that you're following the right people on Twitter, because Twitter can give you all the notifications directly on your mobile phone. So when you have a trade on gold, when you have a trade in Forex or equities, and there is a sudden move, the notification will pop out straight away on your Twitter, and then you will know why that is. And secondly, YouTube channel, AvaTrade's YouTube channel is quite good because this is where I produce my daily content for you guys. And the daily content consists of two different formats. First of all, we have the daily video conversation with you guys, where I would mention all the major fundamentals that are likely to move the markets for that particular day. And in addition to that, what I also discuss in technical analysis is that what is likely to move the market on a daily basis and what factors are really driving those prices. So that is why I think it is really important for you guys to have those accounts. Now, let me quickly show, I don't want to spend too much time on this at all. So let me just quickly show you guys what do I mean by that, and then can you guys go and find them. So when you go to Twitter, so you can see over here that this is my handle right over here, as you can see. So feel free to interact and ask me questions on here, because this video is less than 2 minutes, right? And in those 2 minutes or so, I'm explaining to you guys really that why the market is trading in a way that it is trading and where it is going to go next from here onwards. And I'm talking about, you know, the specific levels of the market, that where the market can really go. And then of course we will go into a lot more detail, but you see the chart which is right in front of you, you can see that how significant that move can be. So really talking about all that percentage moves with respect to that. And in addition to that, you have all these important information, because 6 hours ago, you know, you had the UK CPI data out, and then there was a movement in sterling. So if you were wondering what that happened, so you know, you will know if you are on it. So the second thing is that, you know, on AvaTrade's platform on Twitter, make sure that you are following the right account, the one with the blue tick, because without the blue tick, you know, you could be following someone else's account, which could be very, very wrong. And again, you know, you get all that information over here. The third aspect is YouTube. So this is where all these the videos are being uploaded on a daily basis, and you can see the Twitter videos, the technical analysis videos, and of course the fundamental videos as well. So I highly encourage you guys to attend them. And in addition to that, next week I will also be holding a Q&A session on the same day, August. So basically next Wednesday, I'll be holding a Q&A session at 11 a.m. I believe it's 11 a.m. London time. And so please do sign up for that. Do get in touch with the account managers. They will provide you all that information in relation to that as well. Right. Okay, so all the housekeeping work is done. So now let's move on to our agenda for the day. Now, the importance of US FOMC. So first of all, what is the FOMC? Federal Reserve minutes, right? So the Federal Reserve is the bank over in the United States which controls the interest rate and the monetary policy. This interest rate and monetary policy influence every single thing that in the US really. So whether we are talking about fixed income, which is very, very high for this particular webinar in terms of its complexity. So for this webinar, we're going to keep it to Forex. So it impacts the Forex, the Federal Reserve's meeting. It impacts the equity markets. It impacts commodity markets, gold, oil, all of that. So it is very, very important. And remember, the Federal Reserve has already lowered the interest rate. The interest rates are sitting at the lowest point. They are even at a lower point than they were during the financial crisis. And in addition to that, the Federal Reserve has also increased its asset purchase program. Now the Fed over in the United States is buying the corporate bonds. Now, what are corporate bonds? You know, the corporates, the United States, the US businesses, American businesses, which are listed on a stock market, they can issue a bond on the market, and then the Fed is buying those bonds in order to give them liquidity, meaning in order to flush money to these guys so that they can stay liquid, they can stay live for a longer period of time. Before, the bank only, the Federal Reserve only used to buy mortgage securities, but now they're also buying corporate bonds as well, something that I've never ever done that. If it continues like this in the next crisis, I think that the Fed is really going to start buying the US equities as well. So that would be something to see. But right now, the Fed started this because their thinking is that, okay, that the US economy is very fragile, the recovery is very weak, and it is likely to stay like that for a longer period of time. Now, when we go to the Forex Factory or AvaTrade's platform on the website, and then when we see the US economic data, that is where you get all that information. So on Forex Factory, I'm just going to go for an argument's sake, and then we're going to look at the economic numbers. So you can see that at 7 p.m. London time, the FOMC minutes will be released, and then at 3:30 we'll have the crude inventory data coming as well. Now, these two numbers are very, very important, especially the FOMC meeting, because when these minutes will be released, these minutes will indicate that what the Fed is thinking about its monetary policy. Are they thinking of reducing their asset purchase program? Because if they are thinking of reducing the asset purchase program, that means positive dollar. That means less upward movement for gold. That means less upward movement for equities. That means that euro dollar can lose its strength, sterling dollar can lose its strength. Anything which trades against the dollar will lose its strength, because if Fed starts to think that the economic recovery is coming back, that means they do not need to lend money, or they do not need to, do this sort of a quantitative easing that they are doing. So that is going to have an impact, but nothing is really expected, anything significant from these Federal Reserve minutes today. Why? Because these Federal Reserve minutes are likely to indicate the same stance that what the Fed has been holding for the last number of weeks, which is that economic recovery is still not very much on its track, but it is on track to recovery, but it's not becoming but there isn't any significant improvement. And as long as this is the stance between the Fed, then we are unlikely to expect major movement, but we will expect big movements in the equity market, because the equity market wants to see, like the S&P 500, the Dow Jones, and the Nasdaq, they want to see the Fed to keep the interest rate lower for a longer period of time. And if it confirms that, then expect the S&P 500 index to move above its record high. Expect the Dow Jones index to continue its journey towards its record high. Expect the Nasdaq index to continue putting new record highs. So that is what pretty much the dominant force over there. So let's go back to our presentation and see what is next, all right? So what sort of instruments to trade? I've already covered that to you guys. So you can trade equities, stocks, and of course commodities. We will go into a lot more detail in a bit. The current state of markets and analysis, and what matters the most for the markets, defining levels and defining strategies. Now, we're going to discuss all of this by looking at the charts. But before we do that, I wanted to give you guys an opportunity in terms of your understanding that how everything that I have said, does that make sense to you guys so far? Okay, I'm hearing that all is clear indeed. Yes, okay, good. Questions? Do you have any questions? Julian, so these summaries for the Federal Reserve meetings and minutes, they will be posted in our analysis on our blog tomorrow. And if you wanted to get the exact summary, you can get from the Federal Reserves. If you go to Federal Reserve, you'll see them there. Or for you to digest them in a very easy format, you can just read any of the news articles, like CNBC, Wall Street Journal, or Bloomberg, anything like that, any of the news, they will have the summary there for you. No, that is not what I said. So the question is, if I heard you, if the Fed decides to cut stimulus, it means anything against the dollar will go bearish. Yes, that is correct. So the dollar will become stronger and or is likely to become stronger. So that means everything can really fall if that is. But remember, that is not what the anticipation is, because the number which really matters in terms of economic numbers or economic or fundamental factor is the next week's GDP reading. Because remember, last time that the GDP quarterly GDP data confirmed 32% plunge, and that is the number that really matters. Where do these charts, where do you get them? Which charts? Do you mean, Stephen, do you mean the MT4 charts? And Kennedy, you are asking me what time and days do we expect the meeting? So the meeting, Kennedy, is today, as I explained to you that earlier. And again, the webinar is recorded, so you can go back and read that. So at 7 p.m. today, the meeting is due. No, this is a London time. Will that not be too late to the markets? What do you mean, Julian? Will that not be too late for the markets? I'm not sure, buddy. What do you mean? So if I get the minutes tomorrow, so how will I know how to follow a particular trade market? Yeah, so Bongani, so you're gonna get the results at the Federal Reserve's meetings summary in the news right after that. But the thing is that the trade is going to happen the moment those results will come. Now, in order for you to understand, this is why you need to be on Twitter, because the moment that the results will come, we will tweet. I will tweet that to you that, okay, what the Federal Reserve meetings have, the summary of that, just one or two line, and what it really means for the market. So that is all what you kind of wanted to know. In terms of trades, we're going to discuss all those trades in a minute. Okay, the financial charts. So I don't know, Stephen, again, what financial charts you're referring to. If you can just elaborate a little bit more. If you're referring to these charts, these charts are MT4 charts. So, we're going to go through them. So you can download the MT4. Do you expect gold volatility after the 7 p.m.? Yes, of course I do. If I wait for a minute tomorrow, I mean, same question. Okay, yeah, no, I've already answered that, Julian, now. Uh, okay, I see that I have to be on a Twitter account. Yes, you definitely need to be on a Twitter account. What is your Twitter handle again? Okay, I have shown you guys earlier, but I will show you one more time. And it is important. It's just right here, Naeem Aslam 23. And Nasdaq is already moving strongly. Yes, Nasdaq is moving for a different question. For different reason. Okay, so Said, go ahead, keep posting that question, and then I will continue. I will come back to these questions. I need to go through these markets and the opportunities right now. All right, so let's begin with the gold chart first of all. Now, what is the opportunity with respect to gold? The opportunity with respect to gold is that the biggest opportunity was this: when the price dropped towards its 50-day moving average. This is your simple moving average on a daily time frame. This is your 100-day moving average. This is your 200-day moving average. And once again, they are your simple moving average. Now, when the price dropped to this point on a YouTube, I mentioned that, and on my Twitter, I also mentioned it, that this was an opportunity. Now, obviously, the price went back up, and as of yesterday, it went back above the 2000 mark. Now, the question for investors and traders is that what do we do if we are not in this gold trade, and where do we go next? Now, the opportunity with respect to gold trade really is as follows. Right now, the price is trading at 1985. For me, the first level of support, the immediate level of support only for those traders who can stomach a lot of risk, comes at 1929 to all the way to 1942. Sorry, bear me 1 second there. Hi, apologies, just had some issues with the tech over here. So what we were really talking about over here is that where do we go from here, right? So what we were talking about, that this is your important level of support, which is right over here, and then it runs up to here. But this is not the most important one, because for me, the level which really matters if you wanted to get back into the trade is between 1859 to, let's say, 1879 or so, 1883. This is an important level of support. Now there is a strong possibility that the price may never get to this point, but if the price breaks below this, the low of this candle, and the low of this candle really is at 1990, then we are below the low of the 50-day moving average. Then we are really looking at the next important level, which is 1792 to 1812. Now these are the three important price levels that I'm really looking at. But on the upside, if let's say the price does come over here today when the FOMC releases its information, right, and then these levels hold, because remember, we don't really put one support level, we always form a zone. So the zone runs from 1831 to all the way to 1848, which is a decent move, $40 move between now and until the end of the day. And if that happens, and if it holds, then it is very likely for the prices to move back up. Then one may not want to target anything less than the all-time high, because I think the Fed isn't really going to change its stance when it comes to this for a longer period of time. I think the Fed is very likely to keep its monetary policy for at its current pace for an extended period of time. Okay, can you guys hear me? I mean, the sound should be back. All right. Okay. Okay. Great. Great. So that is your first trade in relation to that. And again, the recording will be available later on, so you guys can go and have a look at it. Now, with the S&P 500 weekly, on the weekly chart, we have the S&P 500 index. First of all, let me just move this one out of there. The S&P 500 index reaching its all-time high, and that all-time high was right over here. Now, what I'm talking about is right now that the S&P 500 index, either it could be forming a double top, right? The first top being over here, the other top being over here, right? We could have a false breakout, but if the price starts to drop below the low of this particular week, which is 13,319, then it is really likely for the prices to move and then go all the way to its 50-week moving average, which is trading at 3,039. But if the breakout is true, then folks, this is what we are really looking at. We are looking at a measured move. We are looking at a move because now the equity market can really move higher, because the lows of this and to the highs of this was the first cycle, right? The first wave of that. And then if I project that to the upside, I am talking about for the S&P 500 index to increase in its value by another 20% in its next bull run. And remember, the actual bull run, the real bull run will only begin when the market has surpassed its all-time high. That is the bull run that we're really talking about. All of this was not really a bull run. Yes, it was a bullish rally, but this is not a bull run. Bull run is when we cross above the previous highs and now are into a new into new territory. And that is what we are calling about. Now, when we look at the NASDAQ index and apply the same principle, the very same principle, right? So one being over here, the other one being over here. Now, if I do the measure move from here to all the way to here, right? And then I project this one to the upside, because this is all a retracement for the NASDAQ, approximate retracement for the NASDAQ index. Then you can see that the NASDAQ index has pretty much covered nearly half of that move already, right? So that half of that move, 10%, is nearly already done for the S&P 500, sorry, for the NASDAQ index. Not 10%, I don't want it to call a percentage because I don't have a percentage over here, but you could see that how it is, it has gone beyond that particular move. And that is the same concept that I am applying over here. Now, this can happen on the back of the FOMC trade that we have really talked about today. And this is why the FOMC meeting is very, very important. And the next week's GDP reading is very, very important. I think today's webinar has been the most important webinar among all the webinars that we have done previously. And the reason for that is because these measured moves are really likely to change the parameter for the markets in the coming days or in the coming weeks. So let's see what the Fed will say. Let's see what the GDP data will do. And that is when we are going to see that. Now, quickly cover the Forex market. With respect to the euro dollar, there is no doubt in anyone's mind that this particular move for the euro dollar is way overextended. It is way overextended. And I mean, the last time that we've seen a run like this, you have to go back far back, really back quite a lot. But this doesn't mean that this bull run is over for the euro, because this run can really push the euro all the way to 123 mark, really, because that is where the next resistance level is really, it really is for that. It is this area of consolidation which begins right at this point, at the beginning of 1.21, and then it runs all the way to 1.25. So this is the major area of consolidation that we are really looking at. But of course, before that, the price has entered into this area of consolidation or the resistance, and I'm talking about this area right over here. This can equally push the price lower as well, 1.190, 1.20, and this can happen if the Federal Reserve confirms that, yeah, you know what, the recovery is coming, and now we need to ease off the gas, and then we can start seeing the dollar to start moving, change its direction. Isn't going to happen today. I don't think so that it will happen today. I don't think it will happen in the next meeting as well. The Fed will wait for a number of economic readings before they will say that, and that means that this RSI can really reach overbought territory of 77. Right now, it is trading at 66.70. So there's still 7 more points for this RSI to move higher, and those are 7 points can easily, you know, take the index, take the price of a euro dollar out of this range into the next consolidation zone. All right. So let me just check if there are any more questions before we call it a day. All right, okay. Seems like that I have answered most of the questions. Silver, what do I think? Again, the story is very same for silver as well. You know, it's the trade against the dollar. That is what we're looking at. Don't forget your Twitter handle, please. I have shown you my Twitter handle earlier, and I'll show you once again on the presentation if you need it. Sorry, it is right over here. So here it is in front of you. So the Twitter handle, if you just need it again. What is the minimum investment capital to trade on AvaTrade? I wouldn't have a clue, to be honest with you. Check on our website or with your account managers. They'll be able to answer those questions, because I don't really look at the sales part or any of that. My analysis is not biased on anything. I'm just giving you the market information based on my knowledge in the industry, which spans over 15 years, where I have worked for hedge funds and for Bank of America, Bank of New York Mellon. So this is very impartial. It has nothing to do with the sales or anything. So it's just a pure knowledge, market knowledge, that I'm really sharing with you guys. All right, folks, so that is all. And thank you so much. And I hope this was helpful. Again, the recording will be available, and go ahead and go through that again if you need to. Thank you, and see you guys next time.